how does what we're doing, in your mind, help extend the expansion?
We've been gradually moving again to back up to normal kind of rates. And the record shows that there's sort of two kinds of errors, and we're trying to steer between them. One kind of error is to keep rates too low for too long. You can wind up getting imbalances in the economy that either show up in forms of inflation or in the form of financial imbalances. If the other mistake, and we had plenty of advice to do this, is to raise rates too soon and prematurely terminate an expansion. We haven't done that. But we're at a point now where we have to take both of those risks very seriously, and that's why we've been raising rates again quite gradually.
And so, along with these moves on the Fed funds rate, we announced at the Federal Open Market Committee last fall a plan to reduce the balance sheet and let it run off. And for those who are not familiar, not by selling securities, but simply by not replacing Treasury mortgage-backed securities as they mature. What's your assessment of how we're doing so far on reducing the balance sheet, and what do you think are the prospects for progress there the next couple of years?
I think that our plan to normalize the balance sheet is going very well, and it has. I think we were concerned in the run-up to announcing it that there would be strong market reactions and tightening of financial conditions more than we would like or expect. That hasn't happened, and so it's very important that we return the balance sheet to a smaller size. We said we would do this. It's large because of all the securities that we bought as part of the quantitative easing program, which drove down long-term rates and supported economic activity. But we said we would reverse that process and get back to a smaller balance sheet, and we take that seriously. So I think it's moving along very well. I think we don't actually know what the equilibrium size of it will be. In the longer run, the balance sheet will depend on public demand for our liabilities, which is to say currency and reserves. Reserves are just overnight obligations that we issue that sit in the reserve banks in a form of cash, actually. And banks really like them now. The demand for reserves is much higher. So we are in the process of returning to a smaller balance sheet, and I'd say we're on track to do that.